Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energies, talk about crude. We got the EIA data today, and now both the EIA and the API, the American Petroleum Institute from yesterday, showed crude inventory bills. Today's EIA data showed a 3.8 million barrel build. We did have a draw in gasoline, but gasoline was about a 2.5 million barrel draw, and initially that gave a little bit of support to the market. But gasoline is about 3% above the 5-year average, whereas crude oil is slightly below the 5-year average. So the build in crude oil had much more of an effect on the price today. We were actually down about 1.25% when the data came out, collapsed down to about almost down 1.75%, rallied back up and finishing below 67.50, down almost a full 2%. Capacity utilization for the refineries, it's actually called refinery utilization. We saw the first rise in that in the last 4 weeks, a jump of about 4 percentage points from almost the mid 91 range to about 96.1 on that refinery utilization number. And that could show the refinery turnaround has kind of slowed. It can also show a slight bump up in demand, which might account for those draws in gasoline. But the build in crude oil is expected to continue because that is expected to be sort of a one-time jump in that number. If you were to see consistent figures, one of the issues with refinery utilization is the sort of transport bottleneck that we've seen coming out of the Permian. So this is sort of a concern, this transport bottleneck. What we have is pipelines that take crude oil down to the Gulf Coast and down to the refineries at about 11 miles an hour, and they only have a certain amount of capacity to them. They can't necessarily be widened without shutting down, and they can't speed up the process. Crude oil flows at 11 miles an hour. Any faster than that could heat up and damage the product, heat up the crude oil and damage the product. So this transport bottleneck is really a big concern in the Permian Basin, and that has actually slowed the production of the U.S. U.S. production actually fell in this most recent EIA data, and that is mostly due to the bottleneck because the production has nowhere to go, so they slow the production. 75% of the increase in U.S. production comes from the Permian Basin, and that is the place where this bottleneck is of the largest concern because there's just no way to ship this crude oil. We also saw crude oil exports from the U.S. drop slightly. We still have 0.4% higher than this time last year, but that bottleneck is becoming a concern for supply. So it could potentially lend some support to the market. That is nowhere in sight at this point with that EIA build that we saw this morning. This is Bob Iaccino talking about weak crude oil from the CME Group trading floor in Chicago.